While global markets face turbulence, Dubai continues to thrive, breaking record and drawing in investors from around the world. In fact, the Dubai real estate market saw a record-breaking 246 billion dirhams in sales in just the first half of 2025. Hello everyone, I am Khilesh Joshi. I am not just a real estate consultant. I consider myself as a brand ambassador of Dubai. And being a new expert, my views about the market for H1 2025. In today's video, I intend to simply analyze the performance of the real estate market in the first half of 2025 and structured it so it's easy for you to understand. I will also share straight talk on the potential risk here as your industry expert. We will look at what the second half of the year looks like. And for those of you who are interested to know my opinion on where to invest, I will share my recommendation as well. So let's get Dubai H1 real estate performance started. In the first half of this year, 2025, Dubai real estate did a record-breaking 85,669 transaction worth 246 billion dirhams. That's a plus 27% versus same period year ago. Dubai has been growing in double digits for 4 consecutive years. Now of this 246 billion dirham in value, in the first half of this year, apartments grew at plus 10%, townhouses at 53%, and villas at plus 37%. Now even when you look at the volume growth, we see the same trend where townhouses are growing fastest, followed by villas and then apartments. Let's go one step deeper here by looking into the split of sales between apartments and townhouses. In the first half, 30% of the sales value come from villas, 17% from townhouses, and 53% from apartments. If you now look at off-plan versus resale, half one of 2024 saw a 50-50 split. This means that 50% of the sales value came from resale and 50% from off-plan. In 2025, the split is 5,446. It means 54% of the sales were from resale and 46% from the off-plan so far. When you zoom into villas, which make up villas H1 performance, 30% of the sales value, we see that in half one, 94% of the villas sales were in the ready segment versus only 6% in off-plan. Two main reasons for this is that one, developing villa communities is not everyone's cup of tea. Only the government developers are able to develop quality villas communities, and given the commitment requirement from this, there aren't many villas being launched, and two additionally with the recent moves of HNI and ultra HNIs, they prefer ready villas as they want to live in these today, not for 4 years from now. Hence, the demand for ready villas today is higher in townhouses. The split is townhouses H1 performance, difference 62% townhouse sales. In the first half of 2025, came from ready and 38% from off-plan. For apartments, which comprised of 53% of market, this was reversed, 29% of sales were in the ready segment and 70% in off-plan. What does this tell you? Given the global interest in Dubai from investors and influx of end users, the attractive price points and payment plans offered by developers, the Dubai market continues to strive in the segment. We have covered the split between off-plan, growth of homes sold in each price segment, and resale. But another angle that's important to look at is the growth of homes sold in each price segment. For this, we will look at the growth in the number of transactions in each segment. The fastest growing segment was the plus 10 million dirham segment. It grew at 151 index versus a year ago. And key to note here that it has grown 20% since 2020, signaling the attractiveness of buyers' interest. In half one of 2025, only 20% of transactions in this price bracket were from offline, while 80% were in the secondary market of the resale market. Now moving to the 3 to 5 million dirham segment. This segment grew at an index of 128 versus same period a year ago, the second fastest growing segment in the market, and it accounted for 15% of total transactions. While it grew rapidly, it represents a smaller portion of the total market compared to the 1 to 3 million dirham segment. However, it has significant growth potential, showing that middle to upper middle class buyers are becoming more attractive in this high-end market. This also shows that people are growing for premium properties without getting into the ultra luxury spaces. Now the largest segment is the 1 million to 3 million dirham segment, which comprises of 50% of transactions in the first half. This grew at an index of 116 versus a year ago. With half of all transactions occurring in the segments, it's clear that properties in the 1 to 3 million dirham prices range remain the most popular and are generally considered the safe investment. It suggests that buyers are prioritizing affordability while still seeking properties with premium. Hereof, plan contributed to 67% of transactions, while resale contributed to 33%. Now, the last few summary table times I made a video, I got feedback from my clients to share a summary of my points so that they don't have to take too many notes. So this one is for you. Here is a summary table showing what I have just covered so far. Now let's see price per square foot in H1. How all of this is impacting the price per square feet. Half 2025 saw a price per square foot of 1,780 dirhams per square foot versus 1,717 dirhams per square foot in the half one of 2024. This is a growth of 4% and 4% increase in relatively modest, and it suggests few things according to my analysis. One, that market is continuing to stabilize after sharp rises seen in the previous years, and this aligns with broader market maturity where property prices are growing steadily but without dramatic spikes. 2, it indicates that buyers are still willing to pay a premium for well-located, high-quality properties, while luxury and high-end properties like those in 10 million plus and the 3 to 5 million dirhams price range makes up a smaller portion of the market. They are clearly driving up prices in these areas. And 3, part of the increase in price per square foot could also be attributed to the rising cost of constructions, materials and labor, which developers are likely passing on to buyers. The ongoing demand for new developments in prime location would naturally lead to a higher price per square foot as cost increases. Despite this, I'm sure you are aware that at $485 per square foot in the first half, Dubai is still affordable compared to other global stalwarts. Estate market presents significant opportunities. It's crucial to approach investments with a clear understanding of the risk involved by staying informed and align your investment strategies with long-term trends. You can mitigate these risks and make more informed decisions. Now, Dubai, while relatively insulated from some regional risks, is still located in a geopolitically volatile region. Conflicts, tensions, or sanctions in neighboring countries can have an indirect effect on Dubai's property market, particularly in terms of investor sentiment. This recent conflict between Iran and Israel have definitely made new investors slightly cautious, but at the same time, you have the exclusive Jumeirah Emirates Tower getting sold out within minutes during the same period. In the short term, one can be cautious, but those looking at the long run are still investing provided the deal makes financial sense. Now, another key risk everyone is talking about in the recent Fitch ratings. While the forecast suggestions potential 15% correction in the second half, experts disagree. Let's explore both sides. I will share with you the demand and the supply data in detail in the latter half of the video, and you can make your own decision on this. Lastly, interest rates. Dubai real estate is sensitive to interest rate fluctuations, particularly for investors who are financing. If the interest rates globally or locally go up, borrowing costs will increase, which could negatively affect your returns and property values. Having said that, key to note that as of June 2025, 80% of transactions in Dubai are on cash and only 20% are on mortgage, which one can say is driven by off-plan dominance. But off-plan comprised of 80% of the transactions. In my view, it's a factor to watch, but it's not a factor to put off your investment into this. Let's now look at what's driving so much focus on Dubai from the investors. Rental yields. Average combined long-term rental yields for the first half of the year for old contract renewals and new contracts are at 6.93%, apartments at 7.33%, and villas and townhouses at 5.02%. New rental contracts are averaging at 7.35%. Now, one may ask, why is apartment return on investment higher than townhouses and villas? Key reasons are the higher upfront cost for villas, reduced yield as a percent of price. 2. The tenant pool for villas, and typically families, and they are long-term tenants and less frequent rental adjustments, which can result in lower yields versus apartments where rents may increase more regularly due to tenant turnover. 3. There is a higher demand for rentable units in urban areas such as downtown, Marina, Business Bay, and JVC, to name a few due to their proximity to city center and accessible. And as a result, apartments have a higher demand and ROI, while villas are more often located in the suburbs and are less desirable for renters typically. All this is also reflected in the fact that in the rental contracts, in half 190% of the rental contracts are from apartments, 6% for villas and 4% for townhouses. It is also key to note that long-term rental yields are higher in Dubai versus other key markets, as you can see in this chart. On top, if we look at short-term rental yields, there are 1 to 2% higher than long-term rental yields, once again making them one of the highest versus other key markets. Now, first half of 2025 saw a number of rental transactions in line with year, When we talk about short-term rentals, but the value of the short-term rentals transaction were up to 9%. Let's now look at another very important factor, population. Dubai's population is at 3.95 million, which is a growth of plus 110,000 people in 6 months since January 2025 and plus 230,000 people since 2024. That's a 6.2% increase. Now, keep in mind, this isn't just a one-year phenomena. Over the last decade, the population has grown by 6% annually, while the global average, it's at a 1.1% now. Dubai, along with major cities in the world, tracks its daytime population, which is a key metric major cities globally use for urban planning, retail analysis and infrastructure development to ensure the city functions smoothly. It is a combination of the residents and visitors in the city at any given point of time. Country has made it very simple for investors, business owners, entrepreneurs and professionals to secure residency in the Emirate. As we know, Dubai's population growth is not just about residents. It's also about the constant influx of the visitors, and here's how that's affecting the demand of real estate. So let's look at tourism numbers, travel and hotel occupancy in the first half of 2025. Dubai welcomed 7.15 million visitors in the first 4 months of the year. If I assume no growth in May and June versus 2024, which we all know is conservative, then we are still seeing an increase of 7% versus a year ago. So we are well on track to achieving the target of 23 million visitors in 2025. What caught my attention during my research is that Dubai is now the first certified autism destination in the Eastern Hemisphere. And I say this with so much pride for my city. Zooming into the travel numbers, Dubai welcomed 48.6 million passengers in the first half of 2025, making a 6.4% increase in compared to the same period in 2025, and well within reach of its expectation to handle 96 million passengers this year. All of this is impacting the hotel occupancy rates as well as positively, where we are now at 80% occupancy across both summer and winter months. As per DTCM, with more than 150,000 hotel rooms available, contrary to belief, where most people expect Dubai to be empty in the summer. The city continues to thrive year-round, driven not only by leisure travels, but also by a robust calendar of corporate and MIC events, which are meetings, incentives, conferences, and exhibition during the traditionally slower summer months. Now we have seen UAE GDP growth, Dubai's population growth play a significant role in the shaping the real estate landscape. But it's not just the population driving the economy. There is a bigger picture where we look at the economic growth of the city itself, because a growing economy means more business activity, more employment, more income, and ultimately more power to spend. UAE GDP grew 4% in 2024 to $484 billion US dollar, and is forecast to grow 5.1% in 2025, boosted mainly by non-oil sector. As per the UAE Minister of Economy, His Excellency Abdullah Binto Al-Mari, and as per World Bank, it expects UAE to grow 4.6%, further supporting the optimistic outlook for this country. Additionally, As per this article issued in June 2025, UAE will hit its 4 trillion non-foreign trade by 2027, which is 4 years ahead of its target, with UAE's GDP growing at 4% in 2024 and expected to continue its momentum into 2025. The real estate market remains well positioned for sustainable growth as the economy diversifies and strengthens. We can expect the property sector to continue benefiting from this, attracting both local and international investors. Now, when you have looking at Dubai government expenditure, the performance of the city, it's also important to understand what the government is spending on. Let's look at the government's expenditure. Expenditures are 86.26 billion dirhams, and 46% of this will be spent on infrastructures. That's a 9% increase in government spending compared to previous years. 30% will be spent on social development like health, education, scientific research and housing. 80% will be spent on safety, security and the justice sector. 6% will be spent on government, excellence and public sector. Now for education, it's key educational institutes to look at academic years and what we saw in 2425 academic year, that there are a 6% increase in the student enrollment of private schools. Dubai has an aim to open 100 new schools by 2033, which is an average of 12 schools per academic year. And we are well within reach for that numbers, as 10 new schools have opened for this academic year, with confirmation of 6 new schools for the next academic year. We also saw 4 key universities opening their campus in 2025. Let's look at the supply of residential units in H1 2025. The first half of 2025, 17,552 units were delivered in the first 6 months of this year, and only 60% of the units that were expected to be completed have been delivered. 40% and overdue. Now, if you look at the full year, then Dubai is projected to deliver 72,000 residential units, which is a seizable pipeline with high volume. In 2026, this number will further go up to 104,000 units, while Dubai on average has historical delivery only 35,000 units a year. This number can seem very high. However, the demand is what is the key to achieve. If demand fails to scale in parallel, the market could face pricing pressure, yield compressions and longer absorption cycles, especially in oversupplied communities. So, population and tourism numbers are key to achieve for Dubai, and we have talked about these earlier in the video. Now, before we wrap, top performing areas of H1 2025 up this videos, I want to shed light on what were the top performing areas in half one of 2025. What were the key projects that were launched in the first half of this year, and what to look out for in the second half of the year. In terms of number of transactions, the top 3 areas overall scales were JVC, followed by Business Bay and Dubai Hill Estate, mainly driven by apartments. Now, when you look at the villa segment, Jebel Ali followed by Dubai Hill Estate and Emirates Living. In the first half of 2025, Miras, Nakheel and Dubai Holding had key launches, namely Asura Bay, which were ultra luxury residences on the iconic JRA shoreline. Acres, final phase of 3 to 7 bedroom villas. Bay Grove residences, which were 1 to 3 bedroom apartments in Dubai Island. And most recently in June, the exclusive Jumeirah Emirates Tower residence in DIFC. If you look at Miras, they had the launch of new master community called Grand Polo, which saw the launch of 3 to 5 bedroom standalone villas, townhouses in Miras South. Ultra premium branded villas placed Ostra at the steamed Oasis project. 4 bedroom semi-detached villa in Rivera at the Valley. If you look at Vasal Group, they created a lot interest in their face. 2 in Jumeirah Golf Estate. By launching a new master plan with the sale of villas and townhouses, Damak on the other hand launched the very popular Chelsea Residences, which were apartments in Maritime City, and Sepa Gate on Sheikh Zayed Road. Beyond Group launched their master plan city with the launch of premium residences in Dubai Maritime City. A new key developer that created a lot of interest was Bain by Aura, beachfront development near the Gut area after Palm Jebel Ali. Dubai obviously saw many more launches, but I have highlighted only the top few developers in Dubai. Closing now, these projects have made it to my list, but it doesn't mean these are the only ones. Watch the market, reach out to your consultant and do your own research. With a such strong start to 2025, Dubai real estate market is poised for continued sustainable growth. There are certain areas, segments and locations that will continue to perform. If you are looking to invest or need expert advice, feel free to reach out to me on the number below. I am Khilesh Joshi from Nikwandam signing off.